Good morning, everyone. Welcome to this week's edition of TurnKey Insider. Happy Friday the 13th, if you're into that kind of thing. Before we go too much farther, just want to do a quick mic check, make sure my mic works. Please type a 1 in the questions box if you can hear the sound of my voice. Excellent. Thank you, Kwong. All right, Susanna, glad to see you guys in class. Welcome. If this is your first week, welcome. Our goal with this class is to just kind of take a more in-depth look at TurnKey Trader, some things we can look at to help avoid some riskier trades, especially during this time as the markets have just kind of come to a standstill. It's been that way for quite a while. So we do want to exercise a bit of extra caution and take only the most strictly qualified trades. Also to answer any questions you guys have in general, things that come up for you while you're trading or learning the system, feel free to throw those out there. This is a open Q&A session, so go ahead and pop any questions in the questions box and I'll get to those as soon as I can. So here we have our standard disclaimer. Pretty standard fare. We mainly look at hypothetical examples. We'll certainly look at a live trade if one pops up. We are not a trading room, so my goal here is not to call qualified trades during class. Of course, we'll look at ones that are qualified that pop up, but mainly past performance is not indicative of future results. And looking at hypothetical examples does have limited value, but it does still have educational value. And we like to glean whatever we can out of that because live trades don't always pop up during class. All right, and with that, let's jump into it. So I did see a bracket trade popping up. So here we have, just give me 1 second here. Give me 1 second here, guys. All right, so here we have a bracket trade brewing up. So we have all right, and Robert P. mentions that RTY is setting up for a possible trend trade long. And Susanna asks, what does bracket trade mean when it pops up? That's just a type of trade, so it's just the name of this particular trade. I'll go over the rules right here. It may look similar to a bounce as it often follows a similar configuration, but it is different in that it requires the bracket to be the same color as the background, basically, whereas the bounce trade doesn't really care about the bracket at all. So that would be one of the main differences. We do need to have our gold bar forming, our background color green for a long. Now the middle panel also green. Now with the bracket trade, we don't really care about these dots here. And I need my direction ribbon yellow line above 0, which it is. Now I generally like it to be a bit lower for the bracket, but it is under 100, so I like that. And the only reason I'm really wary of this particular trade is just because how the markets have been. Very low volume, low volatility, and they do seem to trend fairly decent, but it is this really slow plodding and just slow march onward and upward. So this one's a bit closer to the high of the day. If this bar actually ends up reversing, we may be able to look for a bounce within the next dozen bars or so as our yellow line kind of dips lower, and really looking for it to get in here to this between 0 and 25 range. Of course, we do have quite an established trend, so being a little above that isn't going to be that big of a deal for this particular case. But generally, and especially with recent market behavior, I really like to wait for these bounces where my yellow line comes from the extreme and dips down in this 0 to 25 range. So those are the most strongly qualified bounces that we'll see. So and then to Robert B, let me open an RTY here because I don't actually have RTY data on my NinjaTrader, or live data, I should say. I can. And yeah, so we do have this trend trade in the RTY that is developing. Pretty decent, almost came from an extreme, right around there, like 98, pretty close. The only thing that worries me, and if we kind of look back historically as well, there's, the markets really haven't been giving us these long trends that we are used to seeing. By now it's been a couple months, but we get these very short cycles. So, I get a turn bar, the market goes 20, 30 bars or so. I get another turn bar, market goes the same, then reverses, and it seems to more be giving us this pattern of these really short cycles. So I'm a bit more skeptical in these cases because I don't have a well-established trend. Now, while these trend trades may certainly hit profit target, it just, to me, is a bit too risky in these cases simply because the way the markets have been behaving. If we had a longer established trend in a single direction, I would probably be more eager to take that and not really care that this could be the start of a really long trend. I'd be more willing to hop in on that one. But the way it's been now, and we can kind of see this, is that we've been kind of floating around this 200 even for a couple days, but even this morning, we keep getting pulled back to this 200 EMA, so I'm a bit worried about that. So even though this is a qualified trend trade, just given how the markets have been, and it has been rough and it has been very, very slim pickings, and we do have to be fairly selective and really kind of pay more attention to this type of movement in the market. Whereas, like I said, typically we're, even if the trend kind of starts out kind of weak, I'm a little more lenient with some of those rules, but during this time, I'm trying to be very disciplined and strict and wait for very, very strongly qualified setups. So for a trend trade in this case, I would like to see trends start with green bars. Would be a much stronger sign of a trend trade. So not saying this one won't work, but it's just a bit too risky given the way this particular market's been moving this morning and even in recent memory. So just things to keep an eye out for. And Susanna, back to our possible bounce. So we have this possible bracket trade here. And Susanna mentions a bounce would go long in this case. And yeah, this is really how we can kind of anticipate our types of trades. So I have been hearing in support from a few new TurnKey members that um, they're having a bit of difficulty spotting these trades ahead of time. So one thing I do want to point out, and hopefully this clears it up quite a bit, is that our trend trade is actually the only trade that will appear in the middle of a trend. So it'll always be in the middle here when one of these bars dips down past the orange line, given that all of our other rules are met. All of our other trades, the bracket, bounce, and counter, will all look very similar. So the bracket and bounce sometimes just overlap, and they may both qualify, even though that's a bit more rare. But they do look very similar. They look, at the end of a trend, we get a full reversal. The market moves down a bit, and then we get another full reversal, and that's usually the bar we want to enter on, given that all of our rules are qualified. Like this bounce, my entry point would be way up here. So there could be a lot of chop or movement within this bar. It could very easily take an hour or two, which has certainly been the case this week. I think yesterday I had a few trades I was just, putting on to see how they worked out, and both of them took over 2 hours for that bar to complete. So it's just, been that type of season for trading. I think yesterday volume was down 50%. I was reading an article about it this morning. 50% of the usual historical volume. So, and it's been pretty steady at that level for the past couple weeks, since early September, which is fairly abnormal for this time of year. Usually it kind of picks back up second half of September at least, but it's just been this ongoing low volume, narrow trading range overall. So, I do like to stress we just need to be a little bit more cautious until the market really picks back up. And I know I'm not the only one who's noticed that. I've gotten a few calls from you guys, asking if we're experiencing the same thing, and we sure are. And unfortunately, we have to take what the market gives us, and it just hasn't been giving us much. So, but we can still stay diligent, stick to our rules, and just really wait for the prime setups. So back to this particular, as far as planning the trades ahead go, so as soon as we come to the end of a nice trend, pretty much since the morning, it's just been a long trend. Really what I like to see, so the next leg would be a prime opportunity for a trend trade. But once I get this reversal, or my turn bar here, then I'm going to start planning for either a bracket or a bounce, basically depending on which color my bracket is. So if my bracket remains green to match my background, that lets me know basically that I'm going to have a bracket trade. If the market reverses far enough, my bracket will eventually turn red, and that lets me know that I'd be looking out for a bounce. And in that case, I really want to see the yellow line dip down here. And I don't know if we've had any really good examples of bounces recently. I don't think so. A couple brackets earlier in the week. Just missed bounces. Yeah, it hasn't been a ton as far as bounces go, or really strongly qualified bounces. But once you see that pattern a few times, you can really familiarize yourself with it, and then it's not so much running down a checklist of the rules every time we see this type of configuration. We just know what the pattern looks like and what I'm waiting for. So once I see this reversal bar, if I don't start to get any pullback and the market just kind of keeps trending short, I'm really at that point, I'm just waiting for my yellow line to dip to where I want to see it. So I kind of want to see it come down here and skim off this 25 or just bounce off the 25, and you'll see the price bars follow a similar pattern where you kind of come up to a peak, reverse, market trends short, and then we kind of bounce off. Sometimes it comes down all the way to the 200 and bounces off, but it follows the same pattern as the yellow line. So, but in this case, we would be looking for a bounce long. So even though it's kind of a reversal trade, it's like a reversal trade that happens in a longer trend. So not to say we're going to completely reverse the direction of the market, but we wait for a short price reversal that's been significant enough that kind of lets us know that the market's going to continue on with this trend. All right, so yeah, I mean, not a ton has been going on. There's been a few trades here. I did get a few questions earlier in support that I think I can point out, and some of the things to watch out for and why we watch out for those things. So as I was mentioning in that trend in the RTY earlier, the yellow line did come from an extreme, which is a very strong sign for a trend, but it didn't really start with these green color bars in this trend. So it really didn't tell us that there's been a nice established trend. So on the flip side of that, this is what it looks like when we get a trend late in the run when the market isn't really giving us these long runs. But our yellow line was just dipped below zero. So that tells us we don't really have a strong momentum in one direction or the other. When the yellow line comes from an extreme, it usually carries enough momentum to kind of push up to the other side, and by the time we get past our 60 line here, let me just scrunch this up a bit. So if we had our yellow line starting from, or coming from this extreme, let me kind of just spread this out a bit more. There we go. But when it travels all the way across and gets past our 60, that gives us a clue that we have enough momentum pushing through. So taking a trend trade by that point isn't as risky because we see a lot of momentum pushing the market in that direction. But here we have, this very weak yellow line not coming from the extreme, and we're not, we barely get outside of the 60, and the same thing happens. And if you go back historically, even in the past like week or two, you'll probably see this a lot in the NQ, and it's kept me out a lot of some riskier trend trades, specifically where the yellow line kind of cycles between the 60 lines here. So, and it might dip above a little bit here and there, but it hasn't really been pushing through a lot. So that's another sign, and that's been more of a recent market behavior that I've noticed. And sometimes there are kind of short-term indications that pop up that we can use to maybe give us an early warning on whether a certain trade setup may be a bit more risky. And certainly something to keep an eye out for. We don't always let me think of the best way to I guess sometimes there are short-term market behaviors, I mean, it could be 2 weeks, a month, whatever, um, that are stronger clues than our general rules of just taking whenever the trade is technically qualified by the rules. There are other things we still like to see, or um, things that can clue us in when those are too risky. So several things that have come up over the last month, month and a half, 2 months. Um, the market hasn't really been giving us a lot of strong trends consistently. It's been very short cycles with a lot of reversals here and just short runs followed by full reversals. So that clues me in that these runs aren't going on long. So the longer a run goes on, the more risky hopping into a trend trade becomes, right? Because I know that these legs just aren't, it's not the type of market lately where I'm going to hop in and then the market's just going to take off. I might get a little bit of heat retracement, but eventually I'll go back and we'll just keep trending. But here we get the full reversals, bounce off the 200. We do get a decent bracket entry here. But these trends are just a little too risky. And even this bracket hits profit target and we get this retracement here, which stops us out. And we can't hop back in on a trend. And we get another bracket entry toward the end of the day on this bar. So even when we do get in, it seems much more likely that lately we'll just be hitting our profit target. So something to consider, especially when taking trend trades. The longer a run goes on, I mean, they have to run out of steam eventually. And the way this market's been going, it doesn't take very long to run out of steam. So, we don't expect these really long, beautiful trends that happen all day because the markets just haven't been giving us that. So, there are still trades to be had, of course, not as many as we're usually accustomed to seeing. But they are there. And we can still be, just add in a little bit of extra caution that can really save us some headaches. Robert asks, so bracket and bounce trades are a continuation of a trend. Yeah, I like to think of them that way. And if that helps visualize it a bit better, because they are basically continuations of a trend after we have some type of full reversal. So because they are going to happen in the same direction of the overlying trend, we don't expect the market to reverse its direction completely. We're just hopping back on after the market kind of relieves some pressure, I guess is a good way to look at it. We had this nice long run, nice rally all morning. Then we kind of dip below, shake everyone out. And then however that long goes on, as long as our yellow line stays above 0, we can likely get a bracket or a bounce trade. So we could see this come even probably all the way down to the 200 and bounce off, and that would be a bounce. But they are basically a type of continuation, even though they happen after this full reversal, and they're never going to happen in the trend. So I just kind of described them that way, maybe to help visualize it easier. Susanna asked, is there a different entry point between a bracket trade versus a bounce? No, they'll both qualify, or when you qualify them, the entry will always be the DPI price. So we always use our DPI as an entry price for a few different reasons. It lets everyone see the same entry price, so there's no voodoo on our part. We can't say, oh yeah, I got in this trade uh, down here at the orange line and rode it all the way up, and I just had a feeling it was going to go up. There's none of that. Given that all information is the same, everyone's getting the same exact data, we should all be able to identify the same trades and get the same exact entry price. Of course, there will be some variations. Once in a while, our data may be off from someone else's chart. It's going to happen. Nothing we can really do to control that. Just the way the data servers update, sometimes it isn't always in line between the live and historical tick data. Given the event, if you're ever comparing, I know a lot of traders like to trade with partners or small trading groups, even just casually where you kind of check up on each other through the day. But I do get questions about the data feed quite often when two members' charts don't line up exactly. And that's, it's fairly normal. Doesn't happen all the time, but it does happen. If that is the case, you can just reload all historical data. It usually gets rid of any little data hiccups. Another reason we use our DPI price as an entry is that it lets us put in a stop limit order at this price. And I know my order is not even going to be attempted to be filled until that price is reached. So I'm expecting this as a bracket. I know that if the bar closes and hits my green DPI price, it will be a qualified bracket trade because I've already qualified it. So I don't have to worry about that. And then if it reverses and just the market continues moving short, I just cancel my order and wait for the next qualified trade setup. So it's a very powerful indicator and really lets us plan ahead. But we always want to use this. That way there's no, I mean, if people start putting in odd entry points, as I know some do, some take our indicators and, learn these trade setups and then they put their own spin on it, which is, if you want to do that, if it works for you, great. I love hearing when members develop their own trades, as there are certainly other patterns that are successful. But, to me that's just slightly more risky, as I don't like trying to enter in the middle of the bar somewhere and then, there's not really a confirmed direction. I do expect it or anticipate it to hit my green DPI price, but that's certainly not guaranteed. These bars are rather large. They're 41 tick bars, so it takes 41 ticks from DPI to DPI. So there's a lot that can happen in these bars that if you compared it to a 5-minute chart or even a Pro 9 chart, you might see a lot of noise happen just inside this one bar, which is why sometimes they can take so long to build. It has a lot of price action it has to move past. So getting in somewhere in the middle is just far too risky for me. So I'm sure you guys have seen it where the bar will come up all the way and get a tick below the DPI, and then it still retraces and the market continues moving short. So that happens as well. And we could have almost hit our profit target and the market would still reverse all the way. So very important to use the DPI, and regardless of what type of trade it is, they're color coded, so it makes it kind of simple. If we're looking for a qualified trade on this bar, it's a qualified long trade, I'm going to use the green DPI. If it's a qualified short trade, I'm going to use the red DPI. And that's pretty much the most simple way to put how we determine our entry prices. So as soon as I know I have a qualified trade on this bar, as we've already established this as a bracket trade, I could put in my order right now and just wait. It could certainly take a while. But I'll have my order in there and I don't have to stress over it. I don't have to wait until this is almost closed to determine if it's qualified. Uh, that may happen, but I really fail to see a situation where that's the case, where we don't have a very far heads up that we have a qualified trade. So, and that's, I think, one of the great things about this system is that even if you're first starting out and you don't have you haven't memorized the rules or you still need to kind of go down the checklist, just totally fine. Can be a few rules, and until you get the hang of it, it does kind of seem like a lot, I guess. Um, but there's plenty of time to qualify these trades. Um, and every bar that seems like is a qualified trade at this point, if it doesn't close at the DPI, then it doesn't end up as a qualified trade, of course. But it was, or we could qualify it far ahead of time. So before we ever needed to put our order in, there's no last minute chasing the trades, or it's kind of hard to miss a trade in the system unless you're just not looking at that chart. So even just scanning through them, and then once you get really familiar with the rules, you can just kind of glance at it and know if there's a possible trade setup on the horizon. Like glancing at this long trend, right? I see that eventually my yellow line gets out here past the 120, and that's basically the cutoff for a trend trade. Lately, I myself have reduced that, just for me personally, to about 110, 115, just because we haven't really been getting a lot of strong trends that just go on forever. So I've tightened that up for myself a bit. But I know once I get past that limit, then I'm not going to be looking for any trend trades. We're just too bloated here, down here in my direction ribbon, the yellow line, and my ribbons here, my histogram or bars, however you have it set, are past the 120, and that's the limit for the trend trade. So I know once I get past that point, well, I'm not going to be looking for a trend trade any longer. But I can start gearing up. Once I get a full reversal bar here, that's when I want to keep a lookout for a bounce or bracket. And I usually have enough time, but that's when the little light bulb goes off and says, hey, keep an eye out for a bracket in the near future or a bounce trade in the near future. And if the market just keeps reversing and my yellow line crosses the zero, I know I no longer have to look for those trades because we're kind of beyond that threshold. But as long as this is reversing, I'm just waiting for the market to reverse again, continue with that previous trend, and really just need to see my yellow line stay above the zero. If my bracket and background are lined up, they're the same color, I'm looking for a bracket, and I just need my yellow line above zero. If my bracket is not the same color as my background, I will be looking for a bounce trade, and I really want to see this yellow line dip below here. So I just kind of keep those two options on my mind, and that way that gives me a plan of attack for the future. And as soon as I see the bar or a bar retracing and starting to move back towards my green DPI, that's when I can be prepared to put in an entry. So, and if we kind of develop those habits of planning ahead and identifying and just learning what the pattern looks like, so when that starts, I can be prepared to know that, okay, nothing's really going on in the YM, but I do see I have this possible bracket in the NQ. I'm going to keep an eye out on this market more closely until either it works as a qualified trade or the market goes beyond the point where I'd see a qualified trade. And then that, you can kind of get in these rhythms of prioritizing the markets you want to watch depending on how many. I find on average people watch between two 2 and 4 is more common. Some will watch 6 markets. It's definitely a bit easier to do lately because they've just been moving pretty slow. So when the markets are moving a bit more quickly, it's of course a little more difficult to follow 6 markets at a time, but still possible. And learning how to see these patterns develop um, will really give you a good heads up, and so you don't waste time watching markets where nothing's cooking up, you know. So like, I mean, I look at the YM here. See the YM's moving really, really slow. I mean, this is the whole morning, and where's opening bell? Somewhere around here. So opening bell happened in this bar, and it still didn't close until about an hour after the opening bell. We do have a possible bounce here. Didn't quite come from an extreme, but we are down here in this range. But it's moving so slow. I mean, the price isn't even updating, so I can say, you know what, I probably have some time on this one, so I'll just kind of put this one off to the side, and I'll pay attention to a market that is moving more. And I see, well, I take a look at my TF, or maybe we're looking at the RTY. But I noticed that the Russell here is kind of in a weird long-term chop situation. So I have mentioned this before. I do like to point it out. We call it the zipper, basically, where we kind of see these, you know, long, but we either get these long tails or reversal bars that keep going past the 200. So usually it's a little more narrow. These runs aren't as long, even though these aren't long in general. But it's still the same kind of pattern, and it's been happening since the morning. So this is what I would consider kind of like longer term chop, especially for this chart. This is going to be one of the types of patterns you'll see that's a really clear signal of chop, and that there's just a fair amount of indecision in the market, and you'll usually see the yellow line kind of come down just around the 60s, maybe pop out a little here, but it's not really hitting extremes consistently like we like to see, and those are two pretty strong signs of chop that will cause me to sit out of that market in particular. So, and similar case here in the RTY. Let me refresh my chart here. As Robert just pointed out, the RTY never qualified for a trend, so now we're looking for a possible bracket or bounce. Most of the time, I would. So since, you know, we just looked at TF, which is also the Russell, just on a different exchange, but the charts look fairly similar. But again, we see the same type of zipper pattern that really causes me to be a bit more cautious of this particular market. And another, as I was pointing out as well, is my yellow line hasn't really been getting to extremes. So we really like to see that, and especially with the current market conditions. So for bounces, let me just kind of do a side by side here so I can point out the differences. So for the bounces, I would like to see this type of, I mean, this is like the start of a bounce pattern, so very good at identifying that. I would like to point out that the bounces are much stronger when this yellow line comes from at least 100, or, you know, you can fudge it a little bit here and there, 95 somewhere, and especially depending on the trend. You know, if we have a longer trend, it's not as important that it comes exactly from 100 or gets down to, you know, between 0 and 25, because because the market's proven to us that there's a long trend already established. So we likely wouldn't see the indicators, move that way anyhow. It probably moves similar to how this bracket would be. But normally, yes, like this did not qualify as a trend trade. It reversed fully. So normally I would be looking for a bounce in this case because my bracket now has turned red, which tells me I'm not going to see a bracket long because I need that to stay green. So normally I would be looking for a bounce, but just the way this market in particular looks, I'm not extremely excited about, even if the market reverses all the way as a bounce, just because of the yellow line here. It's been doing this weird cycling short term, so it hasn't really been proving to me that we're going to get this bounce pattern. Susanna was asking about the drawing tool. In NinjaTrader, I just use the arrow. It's a Control F2. And you can change the color and all that. You can also right-click on the chart, get your drawing tools or properties, and change the show toolbar to true, and it gives you the toolbar up here at the top, and you have a little drawing tool drop down as well. So all right, so we've got about 8 minutes left in the class, so feel free to throw out any last minute questions. I really wish the markets had been giving us more, but it's just, we kind of got to take what they give us, and just got to stay hunkered down and wait for the volume to pick up, really. I mean, it's just been historically low, really out of the ordinary. So again, I just like to try to exercise caution. We don't want to be too cautious, but we want to be cautious enough that we're not putting ourselves into risky situations. This is a perfect example here in the EMD. We do have this one that it is technically a qualified. Let me update here, make sure I have current. So this is certainly a qualified trend trade at this point, technically. But again, my yellow line didn't come from an extreme. And then I see that my yellow line is kind of running up against some resistance here at this 100 level. So I don't really see that we're kind of pushing through that and really have this strong momentum that I think is just going to carry this trend to the moon. I certainly don't think that's going to happen. So this one, not only did the yellow line not come from an extreme, but I've also seen this resistance here at the 100 line. So those two kind of clue me in that this trade is a little too risky for me, specifically in the EMD. I know some people don't like to trade the EMD at all. It does have lower volume than much lower volume than a market like the NQ. Typically, I don't have an issue with it, but lately the volume has been so low that it's definitely a bit iffy to trade. So, given those three factors, this one definitely seems a little too risky for me. So those little types of things we can glean from our indicators are extremely helpful in not entering into these risky trends when I see clearly that this pattern has established itself fairly frequently. In the past week or so, and I'm sure if we went back 2 weeks, we'd probably see similar behavior. So Oh, and Susanna is asking about the drawing tool. Let's see, which one am I using? It is the arrow line. Control F2, that's the one I use. So mine is, I changed my settings. You can double click on them once you plot one and change the color, width, style, all that. So, all right, we've got about 5 minutes left. I don't see too much cooking up. I would keep an eye on this bracket. I like that. It's pretty good. Um, we are heading into the high of the day, so that's, yeah, it's a little risky, but we do have to kind of find a balance of, what level of risk is acceptable to us. When the markets are like this, so we don't want to be so cautious that we don't take any trades, because there are certainly still trades. Uh, there are certainly qualified trades that we can take. Um, but some of the trends that kind of happen after we've been to the extreme, uh, or after the yellow line breaks through an extreme, is a little risky. Robert, great question, says, when you say the yellow line is not coming from an extreme, what would be the number that makes it an extreme, not just below the zero line? So when I say I want to see it come from an extreme, I mean like in this type of case. So we have it, 100 is that number. So if I'm looking for like a short trend, and I say I want to see the yellow line come from an extreme, means I want to see the yellow line come from around 100, positive 100, down here to below negative 60 is when I'm in the neighborhood for a short trend like this one. Except we had our dot here, but otherwise would be a decent one. Now when the trend is more established, I'll be a little more lax with that one. If it gets up to like 90 or somewhere in that neighborhood, uh, I'll still more entertain the idea of a trend, because we've had such a long established trend, which I just, there's not really an example of it because the markets haven't been doing that. But having an established trend is also a very strong indicator in itself, and does let us kind of or does let us not bend the rules, but we don't have to be so strict with them. Like if I have an established long trend that's been going on all day and I get in a bounce situation, and I do like to see my yellow line on the bounce come from at least 100 and usually dip below 25 and stay above zero. So this little window is the real sweet spot for the bounces, especially coming from an extreme. But if I've had an established trend all day, and the yellow line doesn't quite get down here to 25, maybe it's at 35 or 40, I'm more lenient on that because the trend has been so strong that I kind of expect it to just bounce anyway. It just didn't reach that level that I usually like to see it. I think, Susanna, you're asking about this purple vertical line. That's just the session end. So that's automatically put in there by NinjaTrader. I don't actually add that one. And these are all the highs and lows of the day converging to the new session start. So that should be put on your chart automatic. A white one. Are you talking about like for the debriefs? That is F7 is the white vertical line. Oh, okay. I see what you're saying. The cursor. my crosshairs. So that if you have the toolbar or you right click on your chart and go to cursor, you can select pointer, crosshair, or global crosshair. I like to use the crosshair. The global crosshair will kind of scroll on all charts. So, you know, if you switch to the pointer, you just get your mouse, and like I said, switch to the crosshairs, and you got this one. Excellent. Got it. All right, everyone, we are down to the end. Thank you for attending. Hope we're able to learn a little something. I know the markets have kind of been slow, but, you know, we got to take what we can get. You know, just stay diligent, stick to the rules, be a little more cautious. I don't want everyone to be so cautious we're not taking any trades, but, you know, keep an eye out. Really watch for the yellow line coming from extremes. Watch for that zipper pattern of the, you know, turn bars just kind of being sucked back into the 200. And watch the yellow line coming from extremes. Maybe take those three. You'll really be, you know, in good shape for avoiding some of those riskier, like trend trades that happen toward the end of a trend and stuff like that. So, but, you know, stick with it. We just got to ride out this slow season, and hopefully volume picks up in the near future. We're all riding that same boat. If you guys have any feedback or suggestions or any additional questions that pop up, feel free to drop a line to support. We have a support feature on the TurnKey members area that'll go right to the support box. We'll get to it as soon as possible. You know, if you have any feedback or suggestions of things you'd like to see covered in the class, feel free to let us know. I'm always interested in offering more information that is helpful. So, you know, we want to gear this and make it as helpful for you guys as possible and as informative for you as possible. So if anything pops up, you know, an idea, suggestion, feel free to drop us a line. We'd be more than happy to hear that. So I hope the rest of your Friday treats you well. Hope everyone has a wonderful weekend. And until next time, happy trading.